All right. All right. All right. Hello. Hello. Oh, here we go. Here we go. Good morning. Good morning. Thank you all. Appreciate you jumping on another webinar here. Love seeing it flow in and come through here. Look, it's all about sales. It's all about tangible. It's all about being in the trenches. Something you all know that I pride myself on is constantly being in the trenches, staying focused, just being close to everything that we have going on in our space because the changes are never ending, to say the least. So we are bringing in the experts all the time. You've seen it, and we're not going to stop. And this one is very special. 40 years in the industry, 40 years in the industry, from everything, the back end to the front end, being in the trenches, the sales, interest rates. Mr. Dale Vermillion, how are you doing, my friend?
Jonathan, it is so great to be here with you. I'm doing awesome. I'm hanging out with you, man. Life gets no better.
It's not. And by the way, y'all, that's not a fake background. Okay, like you can put on your screen here. That is a real background. That is a beautiful place. When did you guys get that? If you don't mind me asking.
We bought this place about 6 or 7 years ago up in the mountains in the Blue Ridge. So we love it.
It's gorgeous, and yeah, I remember the first time we met, you were there as well. And once it popped up, I was like, "Is that what I think it is?" Because I've done that. Unfortunately, I've been one of those people. I'm like, "Man, that place is beautiful," and all of a sudden they take off their screen and just a white board behind them. And so I've been unfortunately on that side of it. So listen, with your 40 years of experience, so obviously I can talk about you a bit, but can you just kind of walk through who you are, what you do, what you are passionate about? And I'd love to dive into the actual sales strategy today. Something we're going to talk about that might irk some of you, but I'm a huge believer in it. Is why interest rates truly don't matter. But
That's
before
right.
we get to that, walk me through just a bit of your path and your journey.
Well, as you and I talked about when we talked a couple of days ago, I've been kind of known for the last 30 years as a speaker and consultant as the rate doesn't matter guy. I've trained over 1.5 million loan officers around the country, over 700 lenders. And when I started in the business in 1983, you got to remember, in those days, our rates were 17 and a half. And I was a loan officer for a year, got promoted to branch manager right away after a year, ran 3 different branches for the next 3 years, ran a district of about 250 loan officers after that, a region of like 500 loan officers, and a company of 900. And the best rate I ever saw in those 12 years I was in the business was 12.5%. Our competition was 4%. Not 0.4%, Jonathan, 4% below us because we were consumer finance companies, Transamerica, Associates, Sears Consumer Finance. So literally, I had a team of 900 loan officers closing 15 loans a month in that kind of environment because I taught them that it's never about rate. It's about value you create for your borrowers. It's about changing the life of the consumer. It's about showing them strategies nobody else shows them to create differentiation. And it's about building deep relationships. When you do those things, it's never about rate. It's about life change.
You know, one, I love that. Thank you. I just want people to kind of understand who you are. Got some of your some cool bullet points here. Grew up in Illinois for yourself. You were actually in construction before you transitioned into the sales side of thing. So you actually know a bit about the other side too,
I
on the
do.
construction side of things before pivoting into here. Obviously founded Mortgage Champions, one of the top leading sales training programs that we have. Trained over I say over 1 million loan originators from 500 plus lenders. That is, I had to read that number 3 times just to make sure it wasn't a typo. I asked my admin, I asked a few people, I said, "Are we sure that's what it is?" So that's an actual fact. So many other things. You've been married for almost coming up on close to 3 decades now.
32 years.
32 over 3 decades
Over
now.
3 decades. Yep.
Blackhawks fan, Vikings, Cubs, and a passion for duck hunting.
Yep.
So we're doing our research, my friend, and it's great to have you here. So let's dive into the nitty gritty. Interest rates. So look, I come from the retail space. 6.5 years I spent in the retail space. I worked at Quicken Loans, and our rates were higher. And especially now, knowing what I know, I was 21 years old when I started in the space. I didn't know what I didn't know, and so for us, we were always selling higher rates. I had a team of 12 people. We did $1.2 billion a year for 3 straight years with 12 people. Okay. And it's not because we had the lowest rates in the market. It's
Right.
because of how we structured our sale, how we set ourselves up, the systems, the processes that we have in place. How do you have that conversation with people and clients about interest rates not being the only thing that you need to look at?
Yeah, well, first off, we need to understand why people even ask the question in the first place. This is the problem that I think a lot of loan originators have is We think that when a borrower says, "What's your rate?" or "Hey, I've been quoted this, if you can't beat it, I'm not interested," we think they're serious and literal. They're neither of those. Okay. It's a conditioned response. The only thing that borrowers hear about or learn about or see about mortgages online is interest rates. That's all they know. It's a simple number to settle into. At the end of the day, what we need to help them to understand is the interest rate only covers one component of the loan. What's that one component? The payment. That's the only thing it affects. Doesn't affect the cash, doesn't affect the term, doesn't affect all of the other factors that are important to a mortgage. So here's what we need to understand. If we want to succeed, first, we've got to believe that rate doesn't matter as loan officers. We got to understand that the lowest rate does not mean the best loan. The best loan means the best loan. And the best loan is when we take a borrower, regardless of what our rate is and regardless of what their rate is, and we show them how to do three things. I call it the triple play: lower their payments, increase their cash, and decrease their term all at the same time. And you can do that all day long in this marketplace today because of the debt that's out there in the market.
So the framework to me, y'all, like, listen, the framework he's talking about is important. You might be thinking, well, John, why do I have to be in that framework? Here's why. Anybody here ever go to Google to research their symptoms if they're ever sick? Everything that pops up is WebMD, and it's always I'm dying. Every single time that I do I can't, oh my God, I'm having, oh my God, oh no, oh my God, what's going on? What's wrong with me? Your consumers are doing the same thing. Why? Because you're also a consumer, just in different aspects of your life. You understand the mortgage game very well because of what you do for a living. But everything else, you're doing what they're doing. You're Chat GPT, you're on Google. And right now, what does it say? Interest rate, closing costs, interest rate. Yes, that matters a bit. I'm not going to sit there and pretend it means nothing. Like, yes, it's easier to sell a 2.99 than a 5.99. Yes, I agree. It's the framework that he's talking about. And our job as sales professionals is how do we extract that information from the clients so we can set the sale up properly to really accomplish their goals. Well, John, you use the word like extract. Just like a doctor asked me, right? Do you smoke? Do you drink? How many times? What else are you doing? Are you taking care of your health? Are you watching what you're eating? I don't just walk into the doctor's office, sit down, and they say, here's what you got. Have a good day. Here's your prescription. Walk out the door. No, thanks. I'm leaving. I'm not taking your prescription. I'm leaving the door. So your framework is important. If you're thinking, how's this sales? This is what sales is. Sales is framework. For your 40 years, doing this for 40 years, the ups and downs, the waves, everything you've gone through, how does that framework start to become life for loan officers? When do you see it click? And how do you know when it starts to click? What's things they should work on, like open-ended questions, things of that nature?
So let's start with the rate thing for just a minute then. And let's talk about that. All right. Borrower calls you up and they ask you the rate. First off, what's the first thing that ought to come out of your mouth? Here's the first thing that ought to come out of your mouth. That's a great question. I'm really glad you asked me that. Acknowledge what they said so that you diffuse them immediately. And you don't sound like you've got a high rate because you sound confident in the response. And then answer their question directly. I said earlier, we think the question is literal, but it's not literal. It's a figurative question. The fact of the matter is, what's the only answer to the question, what's your rate? Here's the only possible truthful answer, Jonathan. I have no idea, son. That's the only possible answer because I have not spent any time with you whatsoever. Talk to any doctor. You mentioned doctors a moment ago. There's an old rule that goes like this: diagnosis without examination is malpractice. Same thing in the mortgage business. We commit mortgage malpractice all the time. Okay. Diagnosis, we're telling them their rate without ever taking an application, knowing a thing about their situation, their qualifications, or their goals. That's a mistake. So what I'm going to say to my borrowers, it's a great question. I have no idea yet what your rate is, but I can assure you this, and this is all you need to say: I am as competitive as anybody out there. I am going to get you a great rate. But let me ask you this question. If I can save you more money up front in monthly payments, help you get a more affordable payment that fits your family's budget, help you get cash in your pocket to protect your family during these difficult, volatile times, and help you get a term that matches up your retirement, gets you debt-free sooner, and saves you hundreds of thousands in interest, would you like to hear about it? Now, Jonathan, what will any consumer on the planet say to those three questions?
Yes.
Yes.
It's the yes train. That's the yes train. Like getting people, and I posted it in the chat for those. And by the way, y'all, you have the Q&A button on there. in the Q&A, challenge us too. For some of you out there that don't agree, we want to see it. Like, we're not afraid of that. Dale and I talked about that. We want to know your thoughts on there. Plus, ask the questions as we go through this. We'll answer them accordingly as we've been doing these on the webinars. But what you talked about, Dale, is acknowledge, respond with relevance, and pivot. Here's where you lose the game. Okay. What's your interest rate? 7.25. Oh, I saw 6.75 online. Click.
Dead.
Done. But John, I want to be direct, and you can be direct, but don't pretend that giving them the interest rate isn't this complicated problem that you have to solve on the back end anyway. You know how it works. You're looking at LLPA adjustments. Are they doing cash out? What's the LTV? Is the appraised value going to be there? What's the credit score? Are they under 680? Are they over 680? Is there going to be MI on the loan? Can I shop the MI? You guys know, think about how complex that is. You can't explain that to clients. You're going to lose them. But to his point, that's a great question. Acknowledge. You can go a multitude of ways with it, right? My way might be different from his way, but he has a process. You need to have a process. Hey, that's a great question. I appreciate you bringing it up. As a mortgage broker, I have access to hundreds of different lenders. My rates vary from as low as 4.5, 5, whatever it is, 5.5 to 6.5, just depending on your profile. Walk me through. What are you looking to do? Take cash out, shorten your term, or save money on a monthly basis. Acknowledge. I respond with relevance, so I'm not just ignoring them. And then I'm pivoting into another question and taking control of the conversation. Sales is all about making sure you're in control a majority of the time. You got to learn to give and take in sales. Yeah. That's a big thing that I've learned. What have you seen in your experience? And I want to do a little role play, which we kind of did a little bit. I love it because you're just gung-ho ready for it. Not everybody is ready for that kind of stuff live all the time. But from that perspective, Dale, what are you seeing now from loan officers today that you've been talking to versus a decade ago, not even that long ago? You know, interest rates were, I believe, was right after the HARP. That's 2014. So I think we were sitting, in that 4.5%, 5.5% range. Roughly, we had a little spurt there. What are you actually noticing in terms of differences between LOs of a decade ago and LOs today?
Yeah, look, the problem in a nutshell was 2020 and 2021. Okay. Two greatest years we ever had in the history of the mortgage industry. We closed more loans, made more money than we've ever dreamed of. The problem is it tainted us completely on our mindset about rates. So what I see today is all the loan officers who went through that period of time, they're wanting those 3% rates back, and they're not coming back anytime soon, the bottom line. And what's happening is because of that, they turned into more transactional versus relational loan officers, much more order-taking mindset instead of advisor mindset. And that's what I see today is a lot of transactional order-taking approaches where everybody's freaked out about the rates. Look, I ask the simple question to loan officers every day, okay? You got a borrower who calls you up or inquires or goes on your website or goes through your social media and says, thinking about buying a home. Okay. Isn't it fair to say they know what the rates are? You're not telling them anything they don't know. They see the same news you and I see. They know where rates are at. It's all over the media. Yet they're calling you anyway. What does that tell you about them? They are okay with the rates. Of course, they're still going to ask you the question. And of course, they're still going to want to get the lowest rate. But I love to share this. Here's one you'll love, Jonathan. Did you know that the lowest rate doesn't even exist? It virtually doesn't exist. Now, let me prove it to you, okay? So borrowers on the phone, here's what they say. Hey, I'm looking for the lowest rate. We've heard this one all the time. Here's what I say. Great. So do you mean the lowest in the world? That's the first question I ask them. Now the borrower goes, yeah, I guess I do. I go, great. So let me ask you a question. How many lenders do you think have the lowest rate in the world? They go, I don't know. I go, I do. It's one. That's why they're called the lowest. Now here's the problem. There's over 6,000 lenders in the US alone. So you got 5,999 more calls to go to find that guy. And then here's the bigger problem. By the time you find him, he ain't gonna be the lowest anymore because rates change all the time. Was there absolute truth to everything I just said right there?
Yes. Here's the scale. Like, here's the thing I love most. We just did a team training just literally right now. And she presented it. She's been doing outside sales for 1 year now. She's amazing. She's bubbly. She's energetic. She's crushing it. But it's the excitement that she has when she talks to consumers the exact same way you did. Going into these calls, to his point, listen, y'all, don't, and by the way, don't get irked by this, because if you're the one doing it right now, that's okay. We're here to have these conversations. We've all been there. But think about, he made the best example that I love that you said. You gave me goosebumps. So I was a bartender prior to getting into the mortgage space.
Me too.
And, we talked about this briefly. Like, it's something that I did. I loved it. And one of the things that separates the service level is the excitement of the person that's actually helping you.
That's
All
right.
right, I worked at Buffalo Wild Wings. Me coming up to your table, you tell me you've all had a good waiter or waitress and you've had a bad one. You guys know what I'm talking about.
Yep.
What's better? All right, what kind of wings do you want? All right, that's fine. 6 or 12. All right, what kind of sauces? Okay. Or are you the type of person that's diving in and getting super excited? Hey, here are our specials for the day. Let me walk through them with you here. My favorite sauce, personally, are you into spice first and foremost? You like spice? You got to try our mango habanero. Plus, I'm going to get you a side of Asian zing sauce. Dip it all together in there. You're going to love it, especially if you love spice. When in regards to drinks, I can get you right here for top shelf. It's an extra $2. Plus, I got a bit of a heavy hand as a bartender, so don't worry. I'll take care of you as long as you take care of me. But in regards to drinks, what are you looking for? Look at my excitement. Look at my excitement. Look at your excitement. If you're not that excited on the phone with your consumers, you lost. You know why? Because Dale or somebody else is going to get them on the phone, and you're not going to win that battle if you don't have that excitement. I know things happen in your life. I know things happen in your day, but it does not matter. Your job is to stay focused and committed. Dale, one of the things that I love, first of all, this scripting that you have, obviously you have a lot of it. Is there ways for our people to get access to some of it, especially the ones on the webinar that we have?
Absolutely. We can get you anything that we're doing here. Plus, as you know, we've done a training program for AIME
Yep.
that you guys have access to. It's got a ton of scripting in it of all of these ways to convert. We call it the $1,000,000 minute. It's a powerful training video. So they may want to consider that too.
Yep, we'll send that out too. I'll actually walk through it at the end of this just so they can all see it. So go just diving back in here because it's just something that's important to me. The introduction on a phone call, right?
Yep.
You talked about that introduction. After you're taking control of that conversation, where are you taking the call? If I know a consumer's calling, let's just say, actually, you know what? We're reaching out to a consumer. It's a past client. They've gained equity on the home. We want to pull their credit. We know they're in a bit of trouble because they're calling us. Where do you take that introduction? How do you actually pivot and turn it into something special?
Yeah, well, number one, always open your call with gratitude. It's the first thing you got to do. Okay. Hey, thank you so much for taking my call. Or if they're a past customer, thank you so much for being one of our loyal customers. They may not even remember they're a loyal customer at this point because it might have been 9 months since you called them. But if you open with that, you start to win them over. As soon as you do that, create the connection between the two of you. How do you know them? You've got to go right to that. Hey, the reason I'm calling, you and I talked 9 months ago, or I did your loan 2 years ago, or whatever it is. Find that, or you talked to a realtor, or you came through this resource. Make sure you connect the dots so you become credible to them. So you've created gratitude and credibility in literally the first 15 seconds of the call, and then relate to them. Now, the way you relate to them today is simple. What's the one universal truth of every consumer we talk to today? Here's the universal truth. They're all worried about today's economy. Even wealthy people are looking at the economy, looking at the presidential election race, looking at all the problems overseas, and we're like nervous about what is this going to end up being? If you can say to them, hey, the reason I'm calling is because, as you probably know, just like you, I'm concerned about the economy today. It's really volatile. The reason I'm calling is because I literally am saving people thousands and thousands of dollars and creating more security for them in this volatile market. Would you like to hear more about it? Oh, that's it. You are in that quick.
It is listen, it is that simple. That's why I keep smiling. And this is what we learned. Look, one of the things that I want to bring to the table here is this is what we learned in retail, just so you all know. And I'm not saying that in a bad way. I know we've all learned a different way, but this was enforced. Like there wasn't an exception. It wasn't like you were allowed to do it any different way. You were not. This is the way we had to do it every single time. And then as you get skilled and really good at your craft, you were able to navigate it and start to add your own flair to the conversation, which is obviously what you've learned how to do over the last 40 years of your career and making these conversations so easy for you. You don't care if it's 12 and a half. You don't care if it's 2%. To you, it doesn't matter. The conversations are need to be the same each and every single time.
Yeah.
What's your thought process on what is to come? We've actually heard, and I want to get your insight on this. So 2023, we have the HMDA data. 2023, 649,000 cash out refinances occurred. Mortgage brokers only accounted for 19%. The rest was all retail. What is your thoughts about that? Like, what is the fear? What is the concern? why are we so behind on that specific data when it's just simply cash out refis, which are just conversations with, honestly, your book of business?
Yeah. I think the reason is because we still view a refi in our mind as a rate and term, because that's what we did most of in 2020 and 2021. And so all we're looking at is rate to rate comparisons. That's how we're evaluating whether there's a refinance potential is, well, the rate's 3.5. They're not going to do anything at 6.5. Wait, stop right there. That's wrong. That's stinking thinking right there. We got to quit that immediately. So here's the deal. Okay, I'm going to give you some stats and I will tell you something. I want to make a very bold statement here, Jonathan, and I believe this to the pit of my soul. 41 years I've been in this business. If you said to me today, you got to go back in sales tomorrow, you got to be a loan originator, you could pick any year in the 41 years you've been in the business, which one would you pick? I'd say 2024. I think this is the best refi market I've seen in 41 years. Now, here's the reason why. Two reasons. Number one, the average homeowner has a 42% loan to value today, according to CoreLogic, which equates to $244,000 in equity in their property. That's the national average. Here's the second statistic. The average household debt in the United States, consumer debt, non-mortgage, $104,000. That's a $2,800 payment. Now, I don't care what your mortgage rate is. You got a 2.5% rate. Who cares? That ain't working for you right now if you've got all the debt that most customers have. So I'm going to come in and not do a cash out, but a cash out debt elimination. What I call a code refi. You got to crack the code. Cash out debt elimination. CODE. If you do that, you call your bars up and say, look, here's the deal. You've got some consumer debt. You're paying 28% on those credit cards, 14 and 15% for those auto loans. Your blended rates are off the charts right now, including your mortgage. If I could take all that and put it together, save you $3, $4, $5, $6, $7, $800 a month, show you how to get $20, $30, $40, $50,000 cash while I do it, and cut your term on your mortgage. Would you like to hear about it? What is there to say no to?
Dale, I have goosebumps. So this is called, do not prejudge, y'all. I'm begging you. Don't prejudge. Don't assume you know what's going on in your client's life. Think about your life for a second. Okay. Think about your own life. My life included. All right. I got twins turning 1 year old coming up in September. I have a third due in November. Okay. Like, if you're not asking the questions and you're prejudging, how are you going to know that about your consumers if you refuse to ask? And to his point, listen to his excitement. Here's what happens when we go into some of these conversations. This isn't everybody. This is a lot of what we hear, especially on my side when I'm talking to my LOs too, especially if they're new coming in or coming from retail over here, just not being that order taker he talked about. I know you're at a 4.5%. Don't say that. Who cares? Hey, look, right now you're overpaying on credit card debt. We're looking at your credit report together. Don't be afraid to have the tough conversations with consumers. I heard that today a few times, Dale, and I want your take on this. You know, someone to me, they were like, well, I don't want them to feel like I'm stepping on their toes. I had someone say that to me. I said, you're not. They gave you their social security number. They said, pull my credit. They said, here's my life. Here's everything about my life. I'd like you to take a look at it. The amount of power they gave you, like, they're trusting you to be the advisor. That's literally what they just said. Here's my date of birth, my social security number. Here's my life in a nutshell. Don't be afraid to push them on the credit report. If you see maxed out credit cards, hey, what's going on here? Walk me through. Is everything okay? I'm concerned. I want to make sure you're good. The last time we spoke, you didn't have this credit card debt. What happened? All right, what are you doing about it? Hey, are you making the minimum payments? Or are you trying to pay extra on these? And I just can't. I'm honestly, all I can do is make the minimum payments. Hey, that's okay. Me too. I've been there. I totally get it. I'm here to help you. I'm here to walk you through this process. Don't be afraid. John, I don't want to bring that up. I don't want to do. You have to do it. You owe it to your consumers. You owe it to them. Well, John, they should do a HELOC, or they should do. Give them the options then. Give them the options then if that's how you feel. But don't stop and sit there and say, well, they're at a 2.5. The average consumer does not stay in a home for 30 years. I promise. The data's it's impossible. It is nearly impossible. The data's out there. It is nearly impossible that a consumer finishes a mortgage from start to finish over 30 years. They're moving, they're refinancing, they're doing something every time.
Right.
So, Dale, my question to you on that side of thing, on the prejudging, on how do you coach loan officers to have that difficult conversation without coming across as like pretentious? Like, well, you have so much debt. You have to, that's not how we should talk to consumers. How are you coaching and training that?
Well, the first thing that I get the loan officer to say at the beginning of the call, after you've introduced yourself, you've shown gratitude, you've connected with the borrower, you've talked about benefits and how you're going to help them, is begin by saying, what I want to do is I want to really understand your situation, qualification, and goals at a level that nobody else does. And that means I'm going to not only look at your income and look at your assets, but I'm going to look at your debt. I'm going to look at your liabilities. I'm going to look at your situation. We're going to do all of that. And then I'm going to provide you with a free, no cost, no obligation financial analysis. That's what we're doing. So now the borrower's coming in with the mindset of, you're not selling me anything. You're analyzing my situation for me to provide advice, just what you said a moment ago. So now they're much more open to talk to you. Now I'm gonna share another analogy. You're gonna love this one, because you got to educate. That's really what we're talking about here, is educating the borrower. So how many of us have heard this from borrowers? Okay, I don't want to pay off that consumer debt because it'll be gone in a year or two. Hear it all the time. Okay, here's what I used to do. I go, okay, all right, well, let's take a look at that for just a minute. Let's look at your credit report. I see you got a Discover card here. Okay, it opened in 2004. It has a high credit of 3,000, a current balance of 2923, which is 98% usage of the high credit. It's got a payment today of $64, and the interest rate you told me was 28%. So here's the deal. It has already been open for 20 years. Based on your current payment and based on your current balance at your current interest rate, you got 9.5 more to go. And that's provided three things. Number one, you never use it again. Number two, the rate never changes. And number three, you always make the same payment. What's the chances of that? They go, none. So here's what you've got. You got a forever card, not a Discover card. That's what you got.
I love that.
I'm going to help you. It's a mini mortgage. I'm going to help you get out of that thing. I'm going to create a mortgage loan for you that pays off everything and does it right. Now, let me say one more thing, because you mentioned HELOC. This is important. I hear this all the time from, well, they should take a HELOC. That is the worst thing on the planet that borrower could do. You just saw that they're using their credit cards unwisely. They can't stand the temptation of a line of credit. So what you're going to do is give them a bigger line of credit on your home? No. What you're going to do is pay it off with a fixed term, fixed rate loan that gets them out of that debt once and for all, help them manage their debt better going forward, because they'll have cash flow they didn't have, so they don't need the credit cards. That's how you serve a customer well.
So the HELOC situation, this is a real talk to have with consumers, because a lot of times people are afraid to have this conversation. There's another little trick for all of you listening. If you don't know, on the credit report, on the top right, there's a display trend button. It's got to be on the hard pull only. But if you click on display trend, for all of you out there, all the LOs, it should be in every credit vendor portal, from my understanding. But if you click that button, it actually opens up the credit report more, and you can see if the client's ever made additional payments on that credit card. I think it's like goes back 24 months. But we leverage this quite a bit on our end here, just because we can have that real conversation with clients. If they say, because I always ask them, Dale, to your point, what's your game plan to pay this debt off? Well, I'm going to do X, Y, and Z. All right. And please don't take this the wrong way, but as I look at your credit report, you haven't made anything over the minimum payment in the last 8 months. Is there any reason why you believe that's going to change today? So use those tips to your advantages. Don't let consumers, I don't want to use the word lie, but don't let them avoid what they're trying to avoid, which is the fact that they don't want to look at their debt. They don't want to know about the spot they're in. No one likes to do that. Listen, y'all, when you've been in a position where you don't have a lot in the bank, you're not looking at your bank account. You're just not. You avoid that at all costs. Right. But we switch gears when you have that money in the bank. You're looking all the time, trying to make sure your budget's good. You're so much more amped to do it because you're excited about it. So the consumers aren't going to be excited. You have to teach them and help them lean into that pain. That's a really big ordeal that we're taking advantage of. Now, we're wrapping up here. Do you have calculators, weighted things, averages, things that they can leverage going into your platform?
We don't have that in our platform. I know that like Barry Beebe as MBS Highway is a really good platform to use for stuff like that. We just train on the strategies, the techniques. the scripting, how to approach the customer to convert them more, how to build deeper relationships, how to understand their situation better, and then how to create really unique customized options. That's what we teach at Mortgage Champions, along with, of course, how to call on realtors and all that stuff too. But on the consumer side, that's what we focus on, both on purchase and refi.
Perfect. I went ahead and for all of you out there, I went ahead and sent you a. I appreciate you sharing. I wanted to make sure I was good to share it, but I just shared with you a weighted average calculator for all of you out there. This is for you
Nice.
to download. You could take it. It's unlocked, so you can change and rebrand. It's one we use at my company. So don't get me in trouble with your broker owners. I want you to have it. Change it however you want. This thing is incredible. It's been really easy to use. It's been easy to help visualize for loan officers and make our lives very, very simple. With that being
Great.
said, I'm dropping the link to our friend here and what he provides for our community, our organization for here at AIME. It is unbelievable. I'm getting to know him more and more. He is the real deal. He knows exactly what he's dialed into. He understands the business. I mean, from front to back, it's crazy how much you understand this business, but we're really taking care of people the best that we can. We have it set up here with them, effectively Mortgage Champions, premium members $299, elite members $249, VIP members $199. There's a huge opportunity for us to grow, improve yourself, improve your craft, stay focused on the task at hand, which is what? To get better each and every single day. That's truly all this is. So Dale, I always like ending with this, my friend. I think it's just fun to get your point of view and your perspective, but I'd love to ask you this. So you are driving down the, let's call it the streets of Illinois, okay? And you're going down there and you're on your way to we're going to go with a Blackhawks game because I'm a hockey fan, played for 11 years. And as you're getting ready to go downtown and you're getting all situated, as you're walking down, you see an 18-year-old version of you. And you see this human being just ready to get after life. And you get a chance to give that person, let's call it 2 to 3 pieces of advice. What are a couple things you would tell that 18-year-old version of you walking down to that Blackhawks game?
Yeah, number one, never think you're the smartest person in the room. You know it all. Always be open to learning and growing. That's number one. Number two, get some great mentors in your life. And when you pick your mentors, be careful. Pick people that not only are high producing, very successful people, but they have massive character. They've got great integrity. They've got great work ethic. Pick your mentors very carefully. And then number three, never limit your potential. God has made you to be great, not to be mediocre. Do not limit your potential. I've trained people to do 100+ loans a month all over the country. In this market today, believe it or not. Just interviewed a guy, Hunter Strong, 62 loans he did last month. Kara Whitman, who I interviewed on Batting 1,000 last year, did like 800 loans 2 years ago. These are people who are just literally came out of college, knew nothing about the business, learned the business from the ground up, and they just never limited their thought process, and they're making massive amounts of money. Every one of you can do that, but you've got to have mentors, you've got to be teachable, and you've got to open up your mind to unlimited potential.
Dale, thank you very much, sir. You gave me the goosebumps as usual here as we continue to grow our relationship. My name is Jonathan Haddad. I'm here with special guest, Dale Vermillion from Mortgage Champions. This is your opportunity to grow, your opportunity to continue to improve on your craft to be the best version of you. We all need the help, myself included. I got coaches galore all over the place, constantly pouring into me because you realize quickly as you try to scale, you need people in your corner that have your best interest at heart. And we at AIME are here getting in front of people just like Dale, vetting them out for you, somebody that's an originator having these conversations to make sure we're putting the right folks in front of you. This, my friends, is the right one. I appreciate all of you. Have yourselves a beautiful day. We will send out this recap here and recording. The link to the Mortgage Champions and the discount that you get through AIME is in the link to everybody, plus the weighted average calculator is in the link for you to download. Take care of yourselves. God bless. Dale, thank you for everything, sir.
Thank you so much, Jonathan. God bless you. Appreciate you.